Welcome, 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 everyone. I hope that this is finding you all well. Thank you so much for joining us and for attending this event. We are just happy and excited to be able to provide such an event to our community. My name is Asati Nu, and this is actually NBLA's first webinar of 2023. And so welcome to 2023. Welcome to this Financial Freedom webinar with Terrance Cotton, who is a licensed CPA and CTP, try to say that fast. I am Asati Nu. I'm the founder of the National Black Liberation Alliance and the host of today's event. NBLA is a community organization dedicated to the betterment of marginalized communities with a specific focus on the Black community. Long story short, we are unapologetically Black, and we work hard to keep a focus on providing educational tools and resources for those who are marginalized and disenfranchised in our own communities and around the world. I wanted to offer a little bit of information about our presenter today. Terrance Cotton is 43 years old and an accounting manager living in Atlanta, Georgia. He has also been married for 15 years and is a proud father of two beautiful young ladies. Terrance holds a master's and bachelor's from Jackson State University and is a licensed CPA and CTP in the state of Georgia. He enjoys traveling, pro wrestling, foreign languages, and of course, racing. The main reason why we wanted to be able to provide such an event like this is because, quite frankly, we are, those of us who are coming from communities of color, we know that it is an uphill battle in terms of trying to get ourselves caught up with the rest of the world, if you will. And so therefore, we felt it was important to be able to provide resources such as this, because there are so many of us who are really trying to figure out a way to get ahead and to not only create a sense of comfort and financial stability for ourselves, but also to be able to provide such a thing for our children, for our family, so on and so forth, and to continue a legacy of greatness. And so with that being said, I'd like to just sort of ask Terrance to come on screen and join us, and we'll start with the presentation. Terrance, first of all, I just want to say thank you for joining us. I am just so absolutely grateful that you elected to do this and to be a part of this. You and I had a conversation when we were talking about getting this together, and the one thing that we definitely agreed on is that we have to do better and that we absolutely can do better. And there's no reason why it is that we can't provide the tools and share the knowledge in order to help others do better. So
yeah, no, I agree. I think it's important that we do that. And I think as I get older and you have children and you have friends that have children, these conversations kind of come up more often. It's less about what girl we tried to holler at back in the day. You start thinking about your future.
right, exactly that. So with that being said, I'm going to hand over the platform to you and give you an opportunity to begin to present. And I will share with you all, if you reach a point where you have questions, feel free to start entering them into the chat. There will be an opportunity for a Q&A later. So if you find that you are, questions are popping into your head, go ahead and put them in the chat so that we know to answer those questions later on. So with that, Terrance, I'll hand it over to you.
Okay. And then I'll also say, if I can't answer your question, or if I don't have knowledge on hand at that point in time, please grab that question, send it to me, and I'll be happy to respond at a later time. I got no problem with that. Okay. So let's start with, I guess the introduction is Financial Freedom: Erase Yesterday, Live Today, Plan for Tomorrow, and by Terrance Cotton, which is me. So we can hit the next slide. Financial freedom, and this is our introduction. We have some glossary, some terms that you need to know going forward. We'll talk about a few of the financial disparities, and we'll talk about from there establishing your savings, a sample budget, which can be tweaked any way that you guys want to. From there, after you establish your savings, start to invest those dollars. From there, you want to enjoy life, so save and take your dream trip. And from there, when it's all said and done, preparing to retire. And then you can do more things like this. All right, introduction. This presentation is a quick summary that highlights Black wages disparities compared to the rest of America, emphasizes savings, provides a sample budget. The second portion will highlight the rewards of financial discipline through ability to invest in the market, taking a vacation, and enjoying the fruits of your labor with retirement, which we all want to see and do comfortably. Glossary terms to know. I run these by my kids quite often. They never remember what I said, but I still beat this into their head. A want, something necessary to live and function. Need, something that can improve your quality of life. Big difference between those first two. Budget, an estimate of income or revenue and expenses, bills for a set period of time. That can be for the week, that can be for the day, that can be for the year, however long you want to set it. Below your means, which is really important if you want to get ahead, living on less money than you earn every month. Of course, we know people who, as soon as they make whatever, they spend whatever, and then they spend more. So just keep that in mind. Financial disparities, comparison of African-American wages versus all races. Next, okay, from here, I kind of pulled some information, and a lot of this information comes from the Bureau of Labor, and some of these are going to come from Black Demographics, which is a great website. It's Black statistics put in by Black people. So we run the input of those stats, but this is one that kind of stood out to me from the Department of Labor. This talks about African-American income, median weekly earnings by age, and we have 4 buckets: 16 years and over, 25 years and over, 25 years and over for men, 25 years and over for women. The first couple of buckets for 16 years and older, average is $885. All other races outside of Black average around $1,041. And I'm not going to read every dollar amount to you, but there's a recurring theme of, for every dollar that other races make, we tend to make less. And it can be anywhere from between 10%, 20% for whatever reasons. You know, sometimes it's that glass ceiling. It can be racism. It can be several different inputs there. So just something to keep in mind, that when people talk about an equal playing field, a lot of times it's not very equal. And you're typically, what I like to say, you start the football game off already down 14-0. Next, financial disparities, Black weekly wages by education. And this is a interesting bucket because it clearly shows the earning potential as you matriculate through school, through high school, through getting an associate's, through getting a bachelor's, through getting a master's, and a lot of times for those certifications. This is a broken out graph. This is more detailed, broken out information of the first slide, where we continue to see that same pattern of the wages and salaries tend to be skewed and not in our favor. And typically, as you get older, you'll get into those. Well, as you get those degrees and you move into, and I'm pointing at corporate America, your coworker, typically your Caucasian coworker is going to make more than you, even though you do the same job. And it's been it's been a very sensitive topic, and I share with you personally. My wife works for Wells Fargo. She sees it all the time. The same person right next to her performs the same job, performs less work than her, but they get paid more, and sometimes they get paid more than her. So just something to kind of keep in mind. And again, this comes from Black Demographics. So anytime you want to look these up, all this information is free. Establish your savings. A few quick tips on how to save money. I think we all know people who tend to do this. I used to do this when I was younger, and I have friends and family that do this now. It's a repeating triangle of work, get paid, spend it all, go back to work, get paid, spend it all, and they don't typically save anything. A lot of times when I was in this triangle, I would, the only time I would really have savings is at the end of the year when I file my tax return. And I'm putting this here because this tends to be a problem in our community, where everything that we earn we spend and we save nothing. So just wanted to highlight this. Establish your savings, 10 everyday tips for saving money. And some of these are personal, some of these I grabbed off a couple of websites, but I kind of wanted to point out some of the 10 most important ones, or I thought were most important. And you may or may not use all 10, but feel free to grab the ones that you need. Number one, keep track of your spending habits. A lot of us bank with Wells Fargo, or we bank with Bank of America, or whatever it is. Typically at the end of the month, you can go and look at your balance statement. And in that queue, you can split out everything that you spent for that month into different graphs. You'll see what you spend at the grocery store. You'll see what you spend at the gas station, different things like that. So just be cognizant of where you're spending your money. Number two, separate wants from needs. Self-explanatory. Avoid excessive credit card spending. A lot of times, if you cannot afford it and pay cash for it, a lot of times you don't need to buy it. And that's something that probably is going to rear its head in the next couple of years, if not the next couple of months, due to our debt ceiling. Number four, save regularly. 15% is a start. And when I say 15%, you can tweak that how you want to, but savings should be treated as a bill. Pay your savings like you pay your bills. Number five, avoid spending add-ons. Order water instead of soda. When you're at the restaurant, I love Mexican. And what I like to do to wash down my my tacos and my rice and beans, I like to order a soda. Do I really need that soda? Probably not. Probably want to order that water for free. And you probably have some soda at home. So just something to kind of think of. Limit periodic spending purchases, i.e. unplanned gifts and vacations. Yes, it is spring break. You haven't planned. Your friend wants to go out of town to celebrate and you have absolutely budgeted nothing. That type of knee-jerk spending tends to mess up your budget. You tend to spend money you probably don't have, and you may lean on your credit card, which is a big no-no. Number seven, cut down or downgrade on services, cable and phone. Ask yourself, do you need the latest iPhone? Ask yourself, do you need that cable? Can you do with Netflix? Can you do with Hulu and an internet connection? A lot of times when companies don't make money, they do one or two things. They either increase the billing rate to charge their customers, or they cut expenses. Unless you're going to get a raise immediately, sometimes you need to look at those expenses. Cut down on eating out. Absolutely. I couldn't cook and I bought a lot of food. And a lot of my budget, when I looked at my Bank of America account, it was mostly food. You tend to overpay for things that you can prepare at home. A Five Guys cheeseburger runs you about $9 for the burger alone. You can get 2 packs of meat for $9. Learn to say no. Sometimes people want to borrow money. Sometimes people are in a bind. If you can't afford it, please say no. Before you lend that money, ask yourself, am I going to get this money back? Can I afford to not get it back? Number 10, have a growth mindset. No matter how much you save, no matter how many things you put into play to save money, if you don't think about the positivity of what this is going to do for you long term, you won't put your heart and soul in it. You have to be fully committed to putting yourself on a budget and saving money. Sample budget. An example of managing wages to meet living expenses, save, invest, and enjoy yourself. This is one that I sent to my daughter. My daughter's a senior at Clark Atlanta, and she's thinking about what it's going to be like next year working for Apple, where she's going to spend her money, how she's going to save, and now she's going into the full adulting world. She's never had to pay bills like this, so this is going to help her out. And what I did here is that I took the advanced degree salary of the $1,360 multiplied times 2. If you want to do for the month, but I did it 52 weeks because that's how many weeks are in a normal pay period year. That'll put you at $70,000. So for the month, you get $2,700. From there, I took a run rate percentages of what people typically spend on rent, car, utilities, cell phone, and food. This can be tweaked for your cost of living, where you live, Atlanta is different from New York, which is different from California, which is different from Texas. So this is purely based on the suburbs of Atlanta, which is where I live right now. Rent is typically 35 to 40% of what you make. Your car note depends on what you want to drive and what you can afford to drive. I pulled it off of Hands On Banking, which is a website with Wells Fargo. That's going to run you 17 to 20%. Utilities, $200. Cell phone, $100 for your actual service. It depends on what type of service and data plan you have. It could be more. Food, $290. And this is one where I think is important, because if you shop well, you can feed yourself, and you can cut down on actually throwing money away eating out all the time. Based on deducting all 5 of those bills from your salary, that should put you somewhere around $720, $725. From there, this is what we talked about in the previous tab. From there, I said 15%, but we're going to start at 10. Pay yourself just like a bill. Savings technically should be up with the utilities, but I put it there just to make a point. From there, you take your savings out, subtotal pre-investment $452, and your investment 5 to 10%, depends on how much you have left. Your investments should be like your savings, because what you're doing is preparing yourself for life after. From there, you get $316 to hang out, do whatever you want, buy clothes, etc. Begin market investment, sample stocks to invest your dollars in. What I did here is that I pulled a couple of sample stocks that we all know. I started our family portfolio very late, around 30, 35, because I wasn't into investing. And I would say that if you don't know how to invest, I would take a look at the things that you own. If you own an Apple phone, you should own that stock. If you drink Pepsi, if you drink Coke, you should own that stock. If you wear Nikes, you should own that stock. If you fly Delta or Southwest, you should own that stock. And I wanted to name some of those stocks, put the symbols so people can look them up, look at the affordable stock prices of what you can purchase, and also the sales in billions of dollars of what they earn every year. So after you pay your utilities, after you pay yourself your savings, and then you're looking to invest, start looking at the things that you own, see if they're a publicly traded company, and go and buy those shares. You've already spent money with them. You might as well earn a dividend. Save and take your dream trip. Enjoy the fruits of your financial discipline without falling off track. Absolutely. I enjoy traveling. Everybody that knows me and knows that I enjoy traveling, and we do have a travel budget. It's life is pointless if you don't get a chance to enjoy the fruits of your labor. And I think that the majority of people love to vacation. I don't care if it's in Miami, Mexico, Canada, Europe, wherever it is that you want to go. Save that money and take your dream trip. Here are a couple of tips to do that. Open a dedicated vacation bank account. This way, you cannot mix your vacation money with your utilities and anything else. Number 2, pay cash. Very important, because if you don't have to use your credit card, you won't overspend if you're paying cash. Number 3, use reward points to pay for your flight or hotel or both. 2 of the most dominant rewards cards right now that you can get is the Chase card and the Amex. And what I mean by rewards cards is for every dollar that you spend, you earn points. Those points can be used to go towards your flight or your hotel. So you can research both of those. Cut back on expenses in previous months. If you know you're going on vacation in May, you probably don't want to go out to Juicy Crab every week before then. So if you know you have a vacation coming up, please be mindful of that. Buy your tickets and accommodations months in advance. This is very essential. Typically, as people research cities, a lot of airlines have algorithms that pick up on the traffic of where people are trying to go. And incrementally, as it gets closer to that time, that ticket tends to go up unless that flight is not booked. One thing I will say is avoid, when you pay in advance, if it's a holiday weekend, you absolutely have to get your ticket months in advance. If not, you're going to pay a premium. Vacation and off season, avoid holidays, which is what I just spoke of. Pack snacks, local grocery store. A lot of times when we go on vacation, let's say you're in Miami, the first thing you do is that you go in a store, you go in a restaurant, you go wherever, and you pay premium price for a Coke or a bottle of water. Go to the grocery store, get those things, keep those things in your hotel room. They're much cheaper. Airbnb instead of the resort. The resort charges a premium. Oftentimes, if you go to Airbnb, it's typically a lot cheaper, somewhere between 25 to 30% less than the resort that you're staying, and the hotel as well. Set a budget and stick to it. Self-explanatory. Take advantage of offers. A lot of places will offer you incentives to book travel. A lot of times these are doing their slow periods. So you don't have to do it, but please take those into consideration. Preparing to retire. Your financial treasure chest awaits. And this is where you get to dive in like Scrooge McDuck for all your hard work. Tips to prepare to retire. Determine how much it would take for you to retire. There's several websites that, a lot of banking websites that will allow you to put in what you want to retire with from a cash standpoint. So you can put in your age. You'll put in if you want to have $2 million, $3 million saved, and they will break it out to what you need to save by day, by week, by month, by year. Plan your family. It's $300K to raise one child from birth to 18. This is essential. Children cost money. Children cost time. So please plan your family if you can. I have raised 2 daughters, and I'm pretty sure I've paid more than $600,000 for both of them. Pay off debt. Yes, that student loan too. Absolutely. Absolutely. If you have a house, if you have a car, if you have student loan, if you have a computer, whatever it is, as you get older, you need to get rid of that debt. And the longer you keep that debt, the more interest that they earn off of you. Yes, please pay your student loans. One fun fact for student loans, if you don't pay them, they will hurt your credit. If you do pay them, they don't help your credit. Number 4, live below your means. Invest the difference, mutual funds, ETFs. Absolutely. Living below your means means that you're living off less money than you've earned. Just like the stocks, you have 401k, you have mutual funds, and you have ETFs. And I like to touch a little bit on mutual funds and ETFs. Mutual funds and ETFs are just a bucket of stocks altogether. It's about 5 different stocks. So if you have a shoe mutual fund, you'll have Nike, Adidas, Reebok, and 2 other shoe brands. What they do is that they take your money and they invest an equal portion in every company. So if one company's up, the other company may be down. A mutual fund is designed to hedge your loss. The difference between a mutual fund and an ETF is that a mutual fund, you have to pay a fee for someone to manage that mutual fund for you. So you could have an annual charge of $50 or $100 or whatever that negotiated mutual fund managing fee is. An ETF is the same as a mutual fund, except you don't have somebody managing it for you. So you don't have to pay that fee. And number 5, again, establish what is a want versus what is a need. Do you need that new house right before retirement? Do you need that new car right before retirement? Always keep that in mind. Questions and answers.
So before we get to the Q&A, I did want to just offer up Terrance's information. This will be, and I'll make sure to put this information in the chat, as well as I'll just pull the slide up again before we end. But before we get there with the Q&A, I did want to stress, if anyone has any questions or anything like that, if you have some things that, maybe you were unsure about in Terrance's presentation, please feel free to enter them into the chat, and or you can use the raise hand function, what have you, and we can unmute you and bring you on screen. I did want to ask a few questions, Terrance, just in regards to, so you mentioned in regards to the budget apps, and I'm sorry, you mentioned in regards to the bank, and you can look at your statements and it'll show you
Mhm.
where you're going. Uh, Here's of late, we've seen a lot of these budget apps that have come out.
Mhm.
And even some of the banks are now showing where your spending is going on their own. uh what do you think about those budget apps? Do you advise them? Do you feel like they're a give offer a good overview, or is it sort of not really worth it?
I think a lot of the apps are worth it, and it's kind of like buying a gym membership, right? It's only as effective as you go into the gym, right?
Hmm.
Because there's about 4 or 5 free budget apps. Like a lot of them are, I believe, with Intuit
Hmm.
as well. They have a free like budget app, and I sent it to my daughter. But it's only going to be as good as you're disciplined to use it. And I think that now with people's families growing, with inflation, which is going to be a big problem, a really big problem. I think that we definitely need to take advantage of those budget apps and say, where are my dollars going? Am I spending way too much money on buying clothes? Am I spending too much money on food, eating out? And I'll say this, even with your budget app, it can help you make those choices, because I was a serial grab this shirt, grab this pair of pants, just whenever I'm out. Like I would be out, grab this, grab this, and I would slowly eat my money away. What I learned to do was purchase in like bulk. So I'll shop once every 3 months, and I won't buy anything else. So, but back to your original question, it's only as good as what you're going to do with it.
Thank you. We do have a question in the chat, which is, with the current increases in cost, how does one rethink planning and budgets?
I would put all my needs at the forefront of my budgeting process. That's going to be my utilities. That's going to be my rent or mortgage, my child's tuition, whatever it is. That's a need. Needs going to come first. Wants are going to be secondary. So if you're used to taking 3 or 4 vacations a year, you might have to cut back to 1 or 2. It's just and also that tax refund that you would typically get January or February, where you would take it and go on vacation. Sometimes you have to use that to pay down your debt. So it's
Mhm.
just, it's going to come down to the sources and the uses of your cash.
Mhm. So with that being said, and I'm glad that you mentioned that, and even in alignment with this question, you know, I, I I was just recently visiting with family, and everyone was joking about the cost of eggs going up, right? And uh, my dad said, you gotta like now you gotta scrape the inside of the shell to make
You
sure you
do.
get every bit to
You
make
do.
it to make it worth the money. But that's obviously just talking about eggs. But when you're thinking about things like, taxes going up on things, the cost of
Hmm.
gas going up on
Hmm.
things, but then
Hmm.
if you're still making the same that
Amount
you
of money.
were before those things went up, how would you advise someone to really be able to navigate this increase of cost with still no increase in pay?
One thing that I did was that I was looking at where I was shopping, because I mean, who doesn't love Publix? Publix is great. Everybody's like, Publix and Whole Food, you get the fresh this and the fresh that is A1. And, it's just like God has touched the chicken and the veggies and everything else in there. Publix is expensive. Whole Foods is expensive. So where I had to shift my spending habits is I can't go to Publix. I can't go to Whole Foods. I got a Kroger card. So when I go in there, I grab items that are on sale. When I scan that card, it takes off 50 cents, it takes off $1, it takes off whatever. I'm mindful of where I spend my, you know, money now. I get so much mail here. A lot of them are actual clipping coupons. I clip coupons. That's what I do. I have a BJ's membership. So sometimes I kind of have to buy in bulk. which a lot of times is really cheaper. So I would say be mindful of where you're spending. Um, I would say um, look for alternative methods too, because wherever you work, right? If you're burning up X amount of dollars in gas, how far is that from can you get there via MARTA? It's cheaper to buy a MARTA card than it is for me to drive my car every day. Is it less convenient? Yeah. Do I get to save not having to spend 40, $35, $45 gassing up every 3 days? If you drive an SUV, they're killing you. You're going to spend at least $80, $90 to fill up.
So what I'm hearing you say is essentially find cheaper alternatives.
Find people alternatives.
So rather than spending money on takeout, rather than perhaps even in terms of driving, trying to find some alternative ways to be able to address that. And I do, while I see that, and for anyone that's in the chat who has more to offer on this, I think where we see a lot of the challenges are for those who are really just, they're on that poverty line and they've stretched as far as they can.
Mm-hmm.
And so even for them, how would you advise,
Fixed income? Yeah, fixed
correct.
income. Yeah, because I see it with the elderly like quite a bit. We have, and I think a part of that is the education process where there are resources available from a government standpoint that we don't use. The government funds a ton of local programs that nobody uses. It's just unused dollars, and a lot of times it's for those hardships. South Fulton just got an influx of money for all those types of hardships. So I would say, do your research. If you have an elderly family member and they live in a certain area, Google and say, hey, look, financial assistance for elderly, government programs. That money is absolutely there.
Thank you for that. So another question in the chat, many companies have stopped contributing to retirements instead using 403B. All contributions are on that person. Is there a tool to help know how to save and how much each month toward retirement?
Yeah, I would say after you do your budget, after you pay your utilities, when you take care of all your needs, you're going to have a nice amount of money left. And a lot of times what I do, or what I would advise, anybody who's, trying to save, because social security is not going to be there for us. It's like my dad's living off of it because we are the ones that are really contributing to that right now. And I don't know if the youth has a handle on contributing to it, because we're taking care of our parents. I don't know if they're going to be there to take care of us. I don't know if our kids are going to be there to take care of us. I'm sorry, I got lost. What was the original question? I'm sorry.
Oh, just how do you know how much to save towards retirement?
Okay. All right. One of the websites that we use, and I will have to send it to you, but what it does, you put your age in it, and it basically counts the number of periods between now and when you retire. And what it does, it takes that amount that you want to save and it divides it by those periods. And it tells you what you have to put in order to get there. And there is it's at 2 or 3%. So it's a cumulative number. Please make sure you send that to me, and I will make sure I give the specific website where to put that information in. I know exactly what she's saying, but I definitely need to grab that.
Okay. Next, thank you for that. Next question. I've heard some financial advisors talk about the advantage of credit card usage to increase the perks of like miles, et cetera. Others talk about using these things like cash envelopes to stay within your budget. What do you recommend?
I would say if you're going to use your credit card, only use what you would have paid cash for anyway. If I know that my expenses are $700 per month and I have $700 in cash and I have $700 in credit, I'm going to use that credit card and pay that $700 off and get the points. My bills are paid and they don't earn any interest on me. So with the credit card, only use what you can afford to pay cash for.
Hmm. Thank you. We talked about investment, and I know a lot of people, and the investing in the stock market can be extremely overwhelming. I know for
Mhm.
myself personally, I'm still learning how to navigate that and
Mhm.
still learning, and I've joined a little investment club and we're
Mhm.
learning together and things. But, a lot of people one of my biggest issues is I didn't know where to start. I'm like, where do I even go? Where do I even go to invest? And so, what are some, some maybe organizations or banks, or, how do you get invested in the stock market? Where does that begin?
Yeah, typically banks have a investment branch. Wells Fargo has one, Bank of America has one. If you look at your app, it's going to be there. If not, they'll give you a number to call. Um, I didn't really start investing heavy until probably right before COVID,
Mm,
oddly enough. And I was watching Squawk one morning, and they started talking about like the Buffett principle, and I didn't know what they were talking about. And he broke it down. He said, "Hey, if whatever it is that you own in your house, do you own the stock of that same company? Because you've already given them money." So I would say this for everybody who is scared or not knowledgeable of what to do so far as the investing, look around you and take a look at the five things that you own. Do you have an Apple phone? Do you fly Southwest? Do you wear Nikes? Do you use Amazon? I'm sure everybody uses Amazon at this point in time.
right.
Google, all those things, and the majority of those stocks are under $100. So no, you don't have to have a DuckTales portfolio to start off. Sometimes it's like, hey, look, I got an extra $200 left. Delta stock is $45.
Hmm.
Let me call, say, hey, purchase 2 shares of Delta for me. And one thing that I will say, and what's really important, is delayed gratification. That's one thing that I didn't put in there. Investing and saving is delayed gratification, because what you're telling yourself is that I won't reap the benefits of this right now. I'll reap it later.
Yes. And you mentioned ETFs, and what I can say that I've learned around ETFs is that ETFs do tend to be a safer bet,
Hmm.
especially if you're just starting in the investment game.
Hmm.
Because, I think the other thing was, and I can speak for myself, it was like, I don't gamble because I don't like to give away my money. And so the idea of investing in something and then losing that money was like,
Hmm.
nah. But then with the understanding of ETFs and understanding that really, there's a greater chance that I'm least likely to lose my money.
Right.
And that it's something that, especially for long term, if you're looking at retirement, those types of things, it is certainly a delayed gratification, but it is something that is just another thing that's working for you in the background that, 10, 20 years from now, I'm going to be glad that I did. So
You'll be glad. Yeah.
I
Yeah.
will say the beauty of ETFs.
Yeah, yeah, and that's something that I learned about like later in life, like a lot, because my parents grew up with nothing, so they didn't have the opportunity to teach me about that. But as we got older, technology got better. Information was available. You start to read on those things. So it's not just for me, it's for your children, your neighbors, children as well. But you're absolutely right. ETFs give you an opportunity to hedge your bet. It's okay. These two guys are barely making it, but these three guys that are in the same bucket are doing great. You net those together, and you're still
Mhm.
on the good side. So yeah, you're absolutely right.
And in that vein, I know that there are some companies that offer automated investing.
Hmm.
So for instance, like the SoFi company, I know that they offer automated investing. And for
Hmm.
just for a little explanation, basically what that means is you give them money and you tell them, sort of what your plan is, what your trajectory is, and then they take that money and they invest it and they move it around for you. And so it's much like having your own investor who is managing your portfolio. What do you
Absolutely.
think about those types of automated investing apps?
I think they're absolutely great because, again, it's gonna be, how you use it. But I think what it does is that it doesn't give you the opportunity to decide to put that money somewhere where it shouldn't go.
Mhm.
It's almost like when you get your paycheck and you tell your company, hey, take $200 and put it here. After a while, you get used to not even seeing that money. So you're able to adopt to doing without it, but that money is working, great for you. And I will say this, if you do work for a publicly traded company, a lot of times they offer their employees an opportunity to purchase stock at a very discounted price. Take it, take it.
Thank you for that. You spoke of the reward points. The
Mhm.
commercials tell us what we should use it on. What are your thoughts in regards to those things?
Only essentials. I'll say this for the majority essentials, food, things that you were going to buy anyway, toilet paper, paper towels, whatever, right? But if you're gonna purchase clothes or anything with it, just make sure that you have that cash. So when that bill comes due at the end of the month, either you can pay that balance in full, or you can pay it to the point where there's just only a little bit left where they don't earn a ton of interest off of you. Because what happens is we get into the habit of, I'll pay it next month.
Mm.
I'll pay it next month. Okay, I'll wait till my refund check gets here. Okay, then I'll pay it. And then it's just interest on top of interest on top of interest. And I think most people know that the minimum payment right now for most credit cards is $35. It used to be less than that. So they're slowly raising that minimum payment, but that minimum payment does nothing. All it does is make you feel like you put a dent in that credit card and you've done nothing. And what they're doing is that they're slowly just making more money off of you over time. So that same dollar that you spent that you didn't pay off, 4 or 5 months down the line, they've earned X amount of interest on it.
Right. And with that, so we're talking about interest and those types of things. And
Hmm.
if you are one of the tips and tools that I was given was that, if you're using it to put gas in the car, as you stated before, use the money that you can pay back.
Hmm.
You can pay it back in a timely manner. You can uh, pay that off and not have that as something that's there. But back to the question is of investing, some people are investing in both mutual funds and ETFs.
Hmm.
Is there one better than the other, or are they sort of mutually good
Uh,
for you?
I would say, well, there's a couple different components to that. Of course, for me, the breaking point was not having to buy, not having to pay the management fee. Which is what I don't want to do. That's why I prefer to go to ETFs. Also, buried within mutual funds, a lot of times you get to choose between low risk, medium risk, and high risk. So you get to choose if you really want to take a chance, if you don't want to take a chance, if you want to take, a minimum chance. So there's pros and cons to both. ETFs tend to be whatever it is. It's not a it's going to be a bucket of whatever shares that it is at whatever risk. What's the word am I looking for? Whatever risk component that it is. With a mutual fund, you can kind of manipulate it. So what you can do is, even though you have to pay that management fee, if you can grab a couple of high risk ones that may pay off, some middle ones that may pay off a little, and low interest, you can make out pretty well. It's just that the mutual fund requires a little bit more maintenance.
Mm.
ETFs not so much.
Got it. Thank you for that. So I'm well, first, if there are any more questions, please be sure to enter them into the chat. We're going to be coming to our close. We understand it's a Saturday and we didn't want to keep folks too long, but we certainly appreciate for those of you who are able to attend. And as we close this out, I really am thinking about those of us who are trying to get an understanding of how to manage finances and then just not feeling like there's enough to manage your
Resources.
finances.
Yeah.
Um, And the frustration around that, and really the frustration of when you have things that come up,
Mhm.
you've been doing good, you've been paying everything off, and then all of a sudden something
You have
happens
a
with your
flat
car,
tire.
right?
Yeah.
and
Yeah.
and you got a all-wheel drive, so now you got to get all tires
Mm.
replaced, and that's $500 that you weren't anticipating on having to spend. How would you suggest that people sort of prepare for those things that come up, those unexpected things? And, is it smart to have, four different savings accounts, or is that something that you should just be managing on paper? What would you suggest for that?
I mean, two or three is pretty good. I mean, it just depends on what you want to do with it. I think, and just to take a step back to your comment, I think COVID exposed a lot of our bad spending habits and a lot of our bad savings habits because it ran across CNN for probably 2 weeks. The average family didn't have $250 for just a one-off expense,
Mm.
and that alone is just alarming that people don't have that money just in case something goes wrong. I would say if you don't have it, baby steps. If it's $20 here, $30 here, put that to the side. And when you get those, when you get those windfalls of cash, i.e., like your tax refund, don't put it somewhere. You don't have to spend it because you've been doing without that money all year. Put that money away for a rainy day.
And so that brings me to the next question, in regards to the instant gratification. And I speak this in truth of even myself. In the Black community, we focus a lot on um, appearance and those types of things, and certainly there's some history behind that in terms of when you don't have anything else, at least you can look good and make it
Right?
look like you have it. And I've always heard the saying, fake it till you make it.
Like,
And so in that mindset, I think it is difficult to, I love sneakers, right? And my family who is watching this, they know this to be very true. So but in how do you work towards changing that mindset and shifting out of that when everyone in the community around you
yeah.
is, that's what they practice, right? And this is the way that you really get through your day to day.
No, I don't think anything's wrong with that. I think, if anything, sometimes it's like a motivating factor, right? I like to travel, I like pro wrestling, I like video games. I have a huge collection of that stuff, so I think, but when it becomes me not taking care of my needs because I have a want, then that's when we have a problem. I completely understand what you mean by that. I was infatuated with express clothes and wearing polo, and I love Jabos, which I'm dating how old I am. Uh,
Mhm.
but I think in my opinion, as you get older, and the things around you change, and you change internally, because yes, you could have a sneaker habit, but as long as your bills are paid and you want to go with your sneaker habit and you've saved money to do that, I don't. I put that in the same bucket as the very bottom line of hang out, shopping things, because you've taken care of things that you need to take care of. But I will say this: there is a everyday millionaire that wears a t-shirt, $17 pair of jeans, and $20 sneakers, and you'll never know who he is. So I think a lot of we need to make sure that we establish the difference between being rich and being wealthy. There's a
Mm.
big difference between the two, and just
Mhm.
because you have it doesn't mean you have to wear it. If that's what you want to do, that's fine. But you know, having a $500 Louis Vuitton bag and having $27 to put in it, that's a problem.
Mhm. I'll shade to that. Yes. 'Cause I think to some extent we may have all been there and doing that. And so if there are no more questions, I just want to thank you again for taking the time to spend with us. We are certainly looking forward to offering yet another presentation in the coming future. And just, the reality is, you all, we really have to educate ourselves because nobody else is going to give it to us for free. So part of NBLA's mission and vision is to really be able to provide resources like this for free. In some other places, you would have to pay a couple $100s to be able to sit in
You
a room
would.
and
You
listen
absolutely would.
to these such things. And so please, if you have questions, please feel free to contact us via email. I'm going to put up Terrance's slide yet again with
Mhm.
his contact information. Please, by all means, take down this information and reach out if you have questions. I do know that there was one question, and Terrance, you were going to send me a link to
Yes. Yes.
uh,
Yeah, it's the retirement required savings. And what it does is that you're going to put in how old you are, how much you want to save, and it's going to divide the time period between where you are to retirement to what you want to save. And it's going to divide it. And it's going to have a component of time value of money, because a dollar today is not going to be the same value of that dollar a week from now, a month from now, a year from now. So yeah, I know exactly what you're talking about.
And I did see, yes, so we will be, I have sent, this is part of the reason why I asked folks to register for this presentation, because I wanted to be able to have your emails. I will be sending a copy of this recording to you all. Please feel free to share it, especially with those that, we got some young people that are out here that are just entering into the world and can really use this information. Because I know my first few years of college, I got so many offers for credit cards, it was ridiculous. So let's educate our young folks before
Yeah.
they start running up that debt. And I will also, like I said, I'll send all the information to your emails.
Mm.
Feel free to share it. This is nothing that cannot be shared. We will also have this posted on our website,
Yeah.
and I can offer the website here again.
And thank you for having me on, because when you said that when you were in college you were offered all those credit cards, I remember that, being at Jackson State. And you can imagine what happened to me when I got all those credit card offers and nobody told me how credit cards work. I ran up a bill
Mm-hmm.
and I had to work to pay that bill off. And when I paid it off, I cut up those credit cards.
Yep. Yeah. So I want to thank you again so much, Terrance. And like I said,
Mhm.
this is something that we're looking to do again. And our next portion of this, we'll be focusing on the little ones and really just how we start to prepare our little ones, because really it's not too early for them to start to learn how to manage their funds. And
Absolutely.
when, as parents, when we're giving out allowances and when they get birthday money and all those types of things, there are really some great tools and tips that we can really start to teach our children as they're coming along, so that it's something that's instilled in them as they get older. So again, I just want to thank you all so very much for attending. Thank you, Terrance, for being a
Thank
part of
you.
this. We can hang on just a little bit longer, and if
Mhm.
folks have some last minute questions, but otherwise I can't thank you all enough. And be on the lookout for your email. I will probably get this video edited and out to you all within the next 24 to 48 hours. I don't want to undershoot myself. So, I will work to get this information to you all. But again, thank you so much. And just looking forward to hearing from you. If you have anything that comes up, any questions that come up, like I said, please feel free to contact us with any of those questions. All right.
And thank you, Carl, for putting that in there, because I think one of the things that he said was, I stopped giving gifts and started buying stocks as gifts to kids. That's an excellent start, man.
Yeah.
That's all.